Hey, good afternoon guys, hope you're doing well, hope you've had a successful trading week as always. I must say a rather gloomy day today in London, which is why I've got the good old jumper on. But coming towards the end now of Q2 of 2020, end of a quarter, which marks a significant benchmark, especially in US indices. So what's happened this month in terms of gains then? Well, we've had the S&P 500 and also the Dow Jones Industrial Average posting gains of around 16 to 17% respectively, which is a huge percentage increase. We've also got other US indices as well, like the Nasdaq Composite Index, which is up around 30% almost. So huge gains. Now, what's kind of been driving these gains? Well, we can account this towards sort of three core reasons. Number one being stimulus from central banks and coordinated action with governments as well. So across the board, we've been seeing central banks rolling out QE programs, so quantitative easing, where they're printing out money and using that money to roll out various physical stimulus packages, in turn helping to support the kind of economy. In the likes of the US, we've seen more direct sort of physical stimulus, where the Fed are rolling out kind of stimulus checks directly to US citizens. So I believe US citizens were getting around $1,000 in physical stimulus checks, which is, positive in that sense. And also we've had central banks across the board cutting interest rates, which makes borrowing slightly more cheaper as well. And above and beyond that, we've got asset purchasing as well. So with the likes of, for example, the Fed buying corporate bonds, and that's helping companies to kind of deal with their debt issues. And as I'm sure you can imagine, a lot of companies right now, no matter how big or small you are, have accumulated quite a lot of debt during this period. So, essentially the key takeaway is markets in terms of, physical banks, central banks and governments are basically sending a clear message, and that is, we've got your backs in terms of supporting their domestic economies, and that in turn is giving markets, again, that slight sort of confidence booster. Number two then is improving trends in COVID-19. So right now, currently, in terms of the situation, it's not as bad as it was back in sort of December, January, where we were in a complete lockdown state where, going outside, you'd see no one there. It's not like that anymore. We've got people outside. A lot of people not even wearing face masks, and it's slowly telling you that, we're kind of going back towards that pre-COVID-19 status. And that, again, is giving markets that sort of confidence booster. Lastly then, we've got signs of there being a vaccine. So Trump has on multiple occasions has spoken about there being vaccines now entering that sort of phase 2, phase 3 testing stages, and that's positive. But bear in mind, let's not get too ahead of ourselves, and that's kind of one of the downfalls with US equity markets right now. They're really moving on optimism, but we had, for example, here in the UK with Oxford University, they produced a vaccine that was initially promising, and it worked for the first few trials, but thereafter it failed in every single test sort of application thereafter. And most of that's due to the fact that the inherent nature of the virus is very much unpredictable, because it's made up of multiple viruses or multiple virus strains, and that makes creating a virus very difficult. So, although there are, vaccines in the process of being made, and that's bolstering US equity bourses higher, bear in mind that we need to actually see these vaccines working, and that doesn't justify the gains that we've been seeing in the US equity bourses. But again, markets remaining very much on that sort of optimism side. So what are then the risks? And I've just sort of lightly touched upon that in terms of US equity bourses being slightly too forward looking, but also the fact that, we are seeing certain states like Texas now rolling back into a sort of lockdown situation as a result of increasing COVID-19 outbreaks. And that's quite worrying, because it tells you that the battle with COVID-19 is still very much on the table. And it was only this Monday that we surpassed 10 million recorded cases, and that's a huge number. And to add to that, 500,000 deaths, that's a very high mortality rate as well. And as I mentioned in the previous blog, the likelihood is that we passed 10 million quite some time ago as well. So we are seeing increasing outbreaks, not just in the sort of powerhouse economies, as in just the US and China, but we're also seeing it in the likes of Australia. We're seeing it in developing countries like India as well, where India is actually twice as bad statistically speaking as the US. So, markets are not really focusing again on that bigger picture, but that's exactly why, World Trade Organizations and larger groups are expecting markets to have that sort of 10% correction. So do just bear that in mind in terms of risks. So looking forward then, what to expect in July? Well, July for me, I think is going to be a really key determining month with respect to deciding the short to medium term direction of US equity bourses. So in this month, it's really going to come down to the development of COVID-19, whether we're going to see states sort of take a turn for the worse and we're going to see more isolated lockdowns like the one that we've seen with Texas. And that will of course see US equity bourses now falling towards the downside as that optimism is cut into, or whether the situation kind of improves from here and we start seeing cases falling below their 7-day averages, we start to see global cases slowing down a little bit, but most importantly we start to see states like Texas improving within the US domestic economy, which is going to be more sort of important for US equity bourses. And if so, then we're likely to see a further rally in US equity bourses. So that's the sort of outlook, but ultimately again it's really dependent on the sort of COVID-19 situation, so do keep an eye on that because it's going to be very important.